at the day's high for the markets. Rupees appreciating again. So we have some fundamentals which are working well for the markets, but overall a lot of earnings which are trickling in. And that is something we'll be tracking today, Vinny.
Absolutely, a lot of earnings that are trickling as well, and obviously we're seeing banks, financials managing to hold on to gains in the trading session. But talking about earnings, LIC is the first management on the show today, and the company has reported a strong set of numbers in Q4 FY26. New business premium has surged 20%, while VNB margins have also expanded. My colleague Yash Jain actually managed to speak up with the CEO and MD of the company, R. Doraiswamy, and began by asking about the quarter gone by and how they see the growth going ahead. Listen in.
It has been a continuous focus to see that the corporation improves its performance. Over the last four years, we have been very continuously focused on this. And we had taken some directional shift in the once we went public. Those efforts continuously on a single point focus has been helping the corporation in improve its performance. We have been focusing on product mix change. We have been focusing on the distribution mix change, as well as improvement in the operational efficiency as well. All three have been giving good results, and we could do very well in the second half of last year. And the entire financial year also, you found that we have shown a good growth in all the numbers, be it the net premium that we have collected, or the APE, or the VNB, and the margins as well. So it has been a continuous focus on improving all these areas, and this focus will continue. And I'm sure year 26-27 will also be progressing in this direction. Of course, we are also wary of the volatility in the market due to the crisis that is unfolding itself, but we are confident that we will be able to do well in spite of that.
Correct. Before I come to specific numbers for the coming financial year, the first 2 months have gone, first entire month and about 20 days of the next month of the first quarter. In the fourth quarter, there was a lot of chatter that there could be some postponement of buying because of the geopolitical issues. April has been good. We saw the numbers. What about the next month after April? Has the performance kept up the pace as April is concerned? And for the first quarter itself, what is the APE growth that you're expecting to come in for the company?
We would like to maintain a good, decent growth. Given the market conditions, we would like to do well. As you told, April has been good, as performance has been good. We would like to continue that kind of a growth for the month of May as well, and for the entire financial year. Of course, the impact of the current crisis on the individuals, only time will tell. But if the crisis persists for long, it can certainly have impact on the people's saving focus or ability to save through life insurance. But we hope that this gets resolved very fast, and we are able to continue our growth momentum the way that we have been growing. We expect it to continue to grow.
Okay. Now let's speak about some of the numbers for FY27. I won't hold you to 1 quarter or 2 quarters, but let's say for the full financial year. And this is something that we've been discussing at the start of every financial year. FY26 saw your VNB growing at about 42%, right? The margins growing by about 360 basis points. As far as APE is concerned, individual APE grew at 13% and total APE grew at 18%. On all these 4 counts, what is the internal target or the ambition for FY27 if you have to outline that for the investors?
No, as an organization, we have been staying away from giving guidance to the market or anything like that. But our focus will be to see that the industry's growth is strengthened by LIC's growth. So we would like to see that the industry grows, the pie grows, and together we march towards insurance for all by 2047. If that has to happen, the growth has to be really good. And the regulatory is on record. What's the kind of growth that is expected from the industry for the years to come? We would like to rise up to the challenge. We would like to see that we perform at a much higher level. But of course, we would not like to be less than double-digit growth is what we will look at.
On the top line,
on the top lines. Yeah.
I am specifically going to ask about the margins. If you look at FY26, you added about 360 basis points on the margin front. This was a difficult year because of various reasons. Let's assume and hope that if FY27 is a better off year, can one expect that you would add about, if not less than the same amount to your VNB margins in FY27? And if that is done, then your target could be about 25%?
I would like to certainly look at that kind of a number, but much depends upon how the market pans out. There are a lot of operational challenges in front. We would certainly like to expand on the growth that we have reached on the VNB margins.
Correct.
But taking that kind of an aggressive call to begin with, I would not like to be making it as an aggressive call to start with. But we will continue to work towards improving our margins in the year. That's for sure.
How do you see it? Achievable if it's a good year? 25% is in the realm of being achieved?
We have been telling that we would like to be matching the industry in terms of VNB margins, but it may take some time for us to reach there, but we are working towards it. That much I can assure you.
Okay. One question we've seen over the previous 3 to 4 years, we've seen a decent growth when it comes to embedded value also. Same goes for this year. I want to understand from you as the management, but it's more of a shareholder question. The share price has not been responding to the kind of growth, in the numbers, the top line, the margins, and the embedded value. What do you think is lacking at this point of time? And if you, of course, had to advise to your shareholder, the Government of India, as the management of the company, is this just a question of liquidity, or is there more to it that you would want them to look at?
So it can be one. Liquidity is certainly one of the factors. Naturally, the share realizing its value. If you look at the Bank of Maharashtra experience, you know, when liquidity improves, naturally the valuation also goes up. That is one thing. Currently, liquidity is a matter of concern, but to address that only, we have come up with that 1:1 bonus issue. So the number of shares in the hands of the market, other than the government, has doubled. And we have also declared a good dividend on top of it. Last year we had paid 12 rupee on the pre-bonus number of shares. Now we have announced 10 rupee, of course subject to the approval of the shareholders, 10 rupee per share on the double the number of shares. So that is what we have announced. Thereby a 66% growth in the dividend has also been achieved. We expect the market to recognize the growth story of LIC, and the perception as well as its valuation should improve. This is our expectation. I am sure as things pan out, multiple areas: 1, our performance numbers; 2, the rewards to the shareholders; 3, the government actions that particularly in terms of enhancing the float available in the market. All these things I am sure will go on to improve the valuation of the LIC shares, and certainly it is likely to realize where it should be.
All right, that's the word coming in from LIC, a big beat versus the estimates. The stock, though, has come up from the highs of the day. It was up around 5%, but then is up just 2.5% as we speak. But for the markets,